The Downfall of America via Hyperinflation. Michael Burry abruptly vanished from Twitter, leaving a trail of questions unanswered. The Big Short investor had issued a grave warning about the stock market's current condition. Market speculation has reached levels not seen since before 1929 crisis, and assets are more overvalued than when the dot-com bubble burst, according to Michael Burry. He's also concerned that the current level of political and economic unrest will surpass that of the 1970s. In his view, the government authorities such as the SEC and the Federal Reserve are doing little to avert the financial crisis that is rapidly approaching. Now let's look at the downfall of America via hyperinflation. Before we continue, kindly subscribe to our channel and click on the notification bell to get updates on more videos like this from us. So without further ado, let's find out how the downfall of America via hyperinflation happened. Burry has been yelling warnings about the financial market's wild speculation and exorbitant valuations for months before he deleted his page. Even though he had previously warned that the stock market was dangling on a knife's edge, it wasn't until his frightening comparison of the United States to the Weimar Republic that officials began to take notice of his dire predictions. He pointed out that investors in Europe had a similar mania and widespread speculation before the price of oil skyrocketed. Before the European nation's price explosion, he observed a similar level of investor hysteria and uncontrolled speculation there. Burry was allegedly contacted by SEC authorities who warned him about his Twitter conduct and how it could influence the markets, according to numerous stories. The tweets he sent out before his account was removed are fascinating and provide a window into the psyche of a man who is well known for his ability to accurately predict market declines. What a disturbing look at America's economic and political future those awful tweets provide. When a tweet was posted on February 20th, 2021, it linked to a book called The Death of Money Burry, which claimed that the US government is encouraging inflation with its new monetary strategy. There's no other time in US history when more money has been printed out of thin air than during these 13 months since the outbreak of the pandemic. Money printing effects are beginning to be felt, and this, along with pent-up demand and an increasing debt-to-GDP ratio, contributes to an unhealthily sick state of affairs in the United States. Right now, everything appears to be fine. You can, however, glimpse what lies beneath these murky waters if you know your history. While the government claims that inflation is only 2%, we are seeing a lot of evidence that it's much higher than that. It's time to take a closer look at the pricing of everything from petrol to houses to lumber to groceries, and the list goes on. No one knows how much inflation the Fed is willing to tolerate before intervening to reduce price pressures. So inflation is measured using a trailing 12-month period, and measured 12 months inflation moves up by a few tenths, which are called base effects. This is a temporary phenomenon that people believe will pass. As the economy completely reopens, there may be a burst of spending because people will be excited that the pandemic is finished. And it might also put upward pressure on inflation now that the pandemic is over. As anything likely to be short-lived, you would perceive it as something that isn't very significant. It's hard to imagine any of those lasting or being substantial. This term has been drilled into everyone's head by the Fed chair for the past year, despite his protestations that it is only a temporary measure. That second Burry tweet was a reminder that the inflation cycle will not occur all at once. Rather, it's a sign of how quickly things will spiral out of control when the air is finally forced to acknowledge inflation. Last year was a stunning breakdown for Germany after not just 1 year, but 9 years of running. From 1918 to 1923, the German mark experienced significant inflation. By 1923, the German mark had collapsed to the point of being worthless and could only be used as toilet paper. However, keep in mind that the inflation period lasted years, and the United States is not exempt from this scenario. According to the events of the past year, inflation or hyperinflation is well known as a method for the downfall of empires, and this one is no exception. Only a catalyst is needed to bring down the primer. Is there something that could act as a catalyst here? This liberal dollar printing we are seeing right now is putting money into the stock market, and Burry is quick to grasp this. The risks taken by professional investing teams are becoming ever greater, using ingenuity to create very advantageous positions, even though this scenario is still going. It's as if he had already predicted what would happen next. Some of the Archangel's capital management positions in media companies and China's internet names were impacted by the recent market volatility. As a result of massive margin calls, the company was compelled to sell off more than $20 billion in equity. Bill Wang, the founder of the firm that was put up as a family office after his own was shut down, is at the heart of this. In 2012, he pleaded guilty to wire fraud on behalf of Tiger Asia, and now it appears like the whole thing is unraveling too, but a little late. Bill Wang was forced to sell some of his stocks this week when Goldman Sachs, which had refused to do business with him for years due to the allegations of insider trading, entered a guilty plea. When it came to stocks like Viacom and Baidu, he was heavily long and leveraged. Viacom took a beating in part because of the timing of its IPO, and 1 month later, a company with over $10 billion in the capital would fail in the middle of a bull market. Extreme leverage may have resulted in losses of up to $50 billion. A careful examination of the facts revealed that this predicament was the result of complex financial manipulation. In contrast to traditional stock positions, Arkeo was able to accumulate huge interest in these firms, some of which gave it exposure to over 10% of their shares without disclosing those holdings to regulators, because they were derivative positions rather than actual stocks. Thus, until the trades became public, Arkeo's ownership of those shares remained a secret. It's another indicator of how much leverage has been built up and how sensitive investment banks are to this leverage in the market craze. As this blow-up shows, there's a lesson in the Arkeo story that should be examined deeper if times are good, yet large investment banks are losing billions of dollars and going bankrupt in an unforeseen collapse. During a strong bull run, a competent investment team can lose $50 billion. So what lurks below the waves, poised to bring down the market as a whole? It's only a matter of time before the house of cards comes crashing down, and the catalyst that was mentioned previously is right in front of us. Consumer prices rose by 0.9% in October, the largest monthly increase since August 2008, primarily due to increasing energy costs and other non-reopening reasons. Summer inflation was fueled by a reassumption of travel and dining, which had been curtailed during the outbreak of COVID-19. The economy heated up in other areas, though, as prices rose at the fastest annual rate in 3 decades. As early as April 2020, weeks after the initial US lockdowns, Burry, who was renowned for anticipating the collapse of mid-2000s housing bubble, warned of the potential of post-reopening inflation. The head of Scion Investment Management also advised investors to prepare for inflation in February, reopening huge portions of the economy and issuing massive stimulus checks might set off an inflationary chain reaction. I hope you gained a lot from watching this video, and if you did, kindly let us know in the comments section. Don't forget to like this video, subscribe to our channel, and smash that notification bell so you don't miss out on great content like this. Thanks for watching, and until next time.